Hello class, today we are going to talk about how to build credit, how to build up your credit score, make it higher. We're going to look at an article from the magazine called Money. Class, so far we've talked about credit in terms of credit cards, mortgages, auto loans. We've talked about savings accounts and checking accounts. Today we are going to talk about credit scores and how to improve them, especially if you have a poor or no credit score at all. Here we go. We're going to open up this How to Build Credit Fast and Earn a Good Credit Score by Martha White. As we read this Money article, we are going to answer the following questions. The FICO score is the most common credit score. It measures your credit worthiness on a scale of what number to what number. Remember, the higher score is better. Question 2. An excellent credit score is what number? A score of blank to blank is considered fair. A poor credit score is lower than what number? Let's look at the article and then we can come back to the rest of the questions. I'm not going to read this whole article because I know you can read it, but I'm going to hit some highlights. You might think the only thing worse than having a bad credit score is no credit history at all. After all, it can be hard to get a car loan or a credit card if the lender has no way of evaluating if you are likely to make all of your payments or to make your payments on time. As we scroll down, the first big subtopic says why your credit score is the key to building good credit. And in this third paragraph, it says that there are 3 major credit bureaus. There's the Experian, the TransUnion, and Equifax. And you can pull free. You can pull your records from each of those companies every year, and that's good to do because you want to see if somebody has charged your credit situation or taken out a card or a loan or something in your name, or if you have a balance out there that you don't know about. When I was purchasing my first house, there was a credit card that came up under my name that I didn't remember signing up for. It was for a company that I had shopped at. And if I had opened up the account, maybe it was so I would get a discount in buying something, but I had never even used the card. I don't even remember getting it. So it's good to check your credit from these 3 bureaus quite frequently. Down here in the middle of this paragraph, it says the most commonly used credit score is the FICO score. That stands for the Fair Isaac Company score. And it ranks your credit worthiness. I think this is question number 2. On a scale of 300 to 850. Remember, 850 is better. The Vanguard Score is another scoring model that was developed by credit bureaus, and it has the same numerical range from 300 to 850, although its formulas of credit worthiness and risk are a bit different. How do they calculate this? Maybe it'll tell us. Let's keep reading on. Although the criteria may vary by lender and borrower's individual circumstances, a score of 800 or higher is considered excellent, while a score between 580 and 699 is considered fair. I'm going to call it good. And anything below 580, so not 580, but 579 or lower towards that 300 range is considered poor. The FICO score uses 5 categories to evaluate your creditworthiness. Payment history, the amount you owe in terms of a percentage. This would be a calculation that they use. Also the credit utilization ratio. Number 3, the length of your credit history, so how long you've had credit. The types of credit you have opened, and how much your credit is new credit. So not stuff you've had from 10 years ago, but how much of it is recent credit. Next subtopic, and a tip for helping you build your credit. How a credit builder loan can help you build credit. What is a credit builder loan? Well, let's read on and see. A credit builder loan is typically available through credit unions. You basically open a debt obligation. In other words, you make a commitment to borrow a certain amount of money, and then you pay it back. Well, isn't that like a credit card or a normal loan? It's a little different. Let's read on. The borrower pays a set amount of money each month. Maybe it's $30 each month. At the end of the loan period, the money is released back to the borrower. So let's say I borrow $300. I don't get that $300. What I do is I commit to paying $30 a month for 10 months. And at the end of that 10 months, I've given the bank or credit union $300, and then they allow me to borrow it. So it's kind of like borrowing your own money, but it's a way to build your credit history or to go from poor credit history to good credit history. You can read on. The next subtopic, how a secured credit card can build your credit. We've talked about secured credit cards before. Remember, those are the ones that you give the bank a bunch of money up front, let's say like $1,000, and then you borrow off of that, and you're paying back that each month. That is a little different than the loan builder, because the loan builder, you don't get your money until the end of the loan period, where the secured credit, you give them your money, but you borrow back from it continually. The next subtopic, how to become an authorized user, can help build your credit. So on my credit card, if I put my daughter as an authorized user, it makes a mark on her credit history, and as long as we both, or as long as I keep paying my credit and she spends on it, but I pay the bill, it looks good for her. The downside is if we don't make the bill paying, it would hurt me, or she spends too much and I don't realize it, it may hurt me, but it would also hurt her as well. The last subtopic, how using alternative data can help build credit. As you read through this, remember this part, that all of these tools are very helpful since they include data sources, and they are usually not found in traditional credit cards. So you may have to dig around to find these. This is data that is normally not included in a traditional report, so may help or may not. Read these and then remember to finish these questions. I read the first two. The next three are 3 to 5 credit scoring categories that FICO uses. Describe how credit builder loans differ from standard loans, and why are secured credit cards useful for people with little to poor credit, and then hit submit. Have a good day.